Good afternoon, everybody, and welcome to our Market Outlook. We appreciate the time you've taken to participate today. My name is Jenny Ann Hall, and I'm Mecardo's Business Development Manager. I'll be facilitating the webinar today. Now, Chris and Rob, can I just get you to confirm that you're online, please?
Yes, Jenny Ann, I'm here. Chris.
Yes, Jenny Ann.
Okay. Now, before we get started, everybody, this is the first time we've been able to offer the audio for the webinar via your computer speakers as well as your phone. So if you are listening via your computer and you have some issues with sound quality, please mute your speakers and then dial in using the 1-800 number that's and the participant code that's on your screen. Now, before we get started, I'd also like to acknowledge the support of the state grower networks, Leading Sheep in Queensland, Sheep Connect New South Wales, Best Wool, Best Lamb in Victoria, Sheep Connect Tasmania and in South Australia, and the Sheep's Back in WA. These AWI-funded state grower networks are fundamental to the spread of new ideas, continuing education and the adoption of best practice among sheep producers around Australia. If you're interested in finding out more about the grower network in your state, contact details for the coordinators are on your screen. Now, for those of you who don't know, Mecardo is an online service providing analysis and commentary for livestock, wool and grain markets. There's an enormous amount of fantastic market information out there, and with Mecardo we value add this information by filtering what's important, by analysing it and delivering what's relevant to our subscribers. And in particular, we focus on the market outlook and what the analysis means for you. Now, with that in mind, we're very pleased to have Chris Wilcox of Poimina Analysis here today to talk about the state of global demand for wool. Many of you would be aware that Chris is the world's leading analyst and commentator on the global wool industry. In addition to his work in Australia, Chris is chairman of the International Wool Textile Organisation's Market Intelligence Committee. We're also fortunate to have Chris as a regular contributor to Mecardo. Now, Chris is just back from Nanjing Wool Conference, so he's going to give us the latest insights into the global demand for wool. So welcome, Chris.
Hi, Jenny Ann.
Following Chris, Rob Herrmann will then take a look at the Australian supply situation, importantly, what this means for the market outlook and price. Robert is Managing Director of Ag Concepts Unlimited, which is an independent risk advisory and market information service. Mecardo is provided by Ag Concepts. Now, before we go any further today, I also would like to acknowledge Andrew Woods of Independent Consulting Services. Andrew has unarguably Australia's most comprehensive wool market database, and Mecardo is fortunate to have Andrew also as one of its regular contributors. Much of the supply analysis that you'll hear from Rob today has come from Andrew, so to Andrew, very big thank you. Now, before we get underway, I just got some brief housekeeping to outline. Firstly, the webinar will run for 60 minutes. We'll have 20 minutes for each of the presenters to talk and 15 minutes question time at the end. Now, because of the large number of participants, your phone has been muted to make sure that the quality of the audio remains high. You can use the chat box at the bottom left of your screen at any time during the webinar to put forward questions. I'll collate these as we go and direct them to the presenters at the end of the session. Now, just to make sure you can ask questions if you need to, I would ask you all to go to the chat box at the bottom left of your screen next to the cog and type in either a Y for yes or an N for no to the following question, answer to the following question. Are you listening to this webinar today via your computer's sound? I can just see those coming through, so that's great. Thank you. You can also use this chat section if you have any issues with accessing the webinar. Your chats will only be seen by the presenters and me and not the other participants. And at the end of the webinar, there's just going to be a short 1 to 2 minute survey. We'd really appreciate you remaining online for this as your feedback helps us continue to improve our webinar service. And finally, if you have any technical issues, you can contact Redback Conferencing by pressing *0 on your phone. Now, without any further delay, I'd like to hand over to Chris. Thank you.
Thanks, Jenny Ann. Good afternoon, everybody. As Jenny Ann said, I've just got back from the Nanjing Wool Market Conference, which was held weekend before last. But I spent about 10 days in China, visiting a number of mills, people that I know, and talking to them just to get a feel for how things are shaping up, as well as having a look around retail stores in Shanghai to get a feel for kind of wool products and so on in store in the lead into the autumn-winter season over there in China. What I want to do today is it's based on the presentation I gave at Nanjing, with a focus on demand rather than prices and Australian production and so on, which Robert will do later. I'll look at 2013-14 as a review, but it also feeds through to setting the scene for what's happening right now, and therefore what we might expect for the remainder of the 2014-15 season. So first of all, let's look at the demand drivers in the 2013-14 season, and as I said, it really does also reflect what's happening right now. And these 8 points pretty well capture those demand drivers. The hesitant economic recovery in the advanced economies, probably better in the US than in Europe, for example, or Japan, but nevertheless, it's still a bit stop-start. One of the big factors has been the slowdown in the economic growth in China, and I'll talk a bit more about China and the importance of the change in what's happening in the economy in China and what that might mean, both in the short term but also in the medium term. Consumer confidence is without doubt lifting in those major markets, as I'll show, but it's not really translating into significantly better clothing retail sales, although we are seeing good sales of interior textiles in a number of countries and have done in the last 12 months or so. Another big factor is that knitwear is performing a fair bit better than worsted woven wear. So when you think about worsted woven wear, that's typically your men's and women's suiting fabrics, but knitwear and also semi-worsted fabrics are doing much better. And I'll explain a bit more about that. Survey from the International Wool Textile Organisation ran back in May in preparations for its Congress, showed that there were weaker business conditions in the global wool textile industry in 2013-14, although that is changing in some countries, and I'll talk a bit more about that shortly. But a big effect was the stock build-up in the wool textile industry, particularly, I think, in China. And I'll talk again about that. And then more recently, we've seen that raw wool purchases by some countries have lifted, but China raw wool purchases are still down. So, and as many of you who've possibly heard me speak before, and being an economist, I do have a number of charts to take you through some of those key points. Well, first of all, economic growth. And then this chart shows the forecasts from the International Monetary Fund from July, but was updated from a group called Consensus Forecast in August. And it shows the annual percentage change in economic growth globally for China and then for the advanced economies. Now, one of the key things to note on this chart, and it's for each of the last 14 years really, one of the key things to note, of course, is the big drop in economic growth in 2009 when the global economic crisis occurred. And then, but more recently, a recovery in the all advanced economies, particularly for this year, 2014, expected. And that's encouraging. On the other hand, if you look at the economic growth for China, you can see how it's dropped back significantly from around about 10% or more in the period 2000 to around about 2011, and it's dropped back to 8% or even less now. And I'll explain a bit more about that change in terms of China's economic growth rate and what that might mean. Nevertheless, that improvement in the advanced economies is pretty useful and pretty important for us. Let me just move to the next slide. And one key thing is that consumer confidence in the US and EU has risen steadily over the last 12 months or so. And this chart shows consumer confidence in the United States, that's the blue chart, and then the European Union, the orange. Now, though, particularly in the US, consumer confidence is at the highest level in almost 8 years. Now, in the EU, it reached the highest level in a bit over 7 years, but has dropped back in the last couple of months, probably as a result of the conflict in the Ukraine. But consumer confidence is really important because if a consumer is feeling confident, they're more likely to feel that they can go and spend their money at retail stores. And that's very encouraging in terms of where the consumer confidence sits. In China, consumer confidence has picked up over the last few months, although it is still a bit volatile. And in Japan, it's certainly improved this year compared with last, and is generally higher than a number of recent years. But, as I indicated earlier, even though consumer confidence is at levels that we haven't seen, certainly in the US and EU, for 7 or 8 years, retail sales of clothing, now this is clothing of all fibres, retail sales of clothing really hasn't responded that well. This chart shows the annual percentage change in retail sales by value in those half a dozen key retail markets for wool. Now, as I said, this is clothing of all fibres. Couple of things to note. The USA, even though consumer confidence has been at very high levels for the year to 2004 to July 2014, clothing retail sales have actually fallen year on year. And that's partly because they had a significant drop in the first quarter of this year when there was extremely cold, snowy, wintry weather that went on for well into February, and that really held back not only retail sales but economic growth generally. Japan has also seen a pullback in retail sales. Italy, which is still struggling through its reform issues, is seeing a drop in retail sales this year, which will be the 4th year in a row that we've seen negative retail sales growth. Germany is slowly improving, but the standout here in the advanced economies is the UK, where we see over 7% growth in the value of retail sales of clothing, which is the great news. And certainly talking to some of the major mills in China, they did mention that the UK has been a very good market for them in the last few months. China, on the other hand, it's still seeing 10% growth in clothing retail sales. But as you can see from previous years, say 2010, 2011, it's well below the 20-25% growth that we were seeing. And this reflects the change in the economy and the slowdown in the general economic growth in China. One thing we have seen, although I don't have a chart here, is, as I mentioned earlier, is that we have seen good growth in interior textiles, things like carpets and rugs, curtain fabrics, upholstery and so on, in a number of countries, although even in the US that has started to pull back a little bit. So what has this meant for the wool textile industry? Well, this chart shows China's wool textile trade as a percentage change year on year for 2012, 2013, and then 2014 for the year to date. For most of these products, it's for the year to July, so very recent data. A few things to note. One is that China's raw wool purchases, that's the where it's got wool imports, increased by over 10% in 2013, while at the same time its exports of yarn and fabric and wovenware and carpets fell. And it was only towards the end of 2013 did its exports of sweaters increase. I think this increase in raw wool imports at the same time as the decline in in exports of a number of its major products, as well as the slowdown in its domestic market, inevitably resulted in stocks building up within the wool textile pipeline in China. Everything going back from finished garments, back through fabric, into yarn, and even top. That's what happened in 2013. As a result of those increased stocks, wool imports for this year, 2014, the blue, has fallen by over 10% so far. At the same time, China's exports of a number of key products, in particular sweaters, carpets, and wool top, and even fabric, have increased so far. That will be clearing out some of those stocks and is encouraging in terms of the prospects for demand from China for raw wool in the next few months. One particular thing I think you should just take note of is the massive increase in exports of sweaters, which is a significant part of the total wool product exports from China. And this next chart shows you something that I really want to focus on in terms of what's happening with sweaters, knitwear, compared with wovenwear, the worsted wovenwear that I mentioned earlier. This chart shows the rolling trend in China's exports of sweaters and wovenwear, and you can see the strong rise in China's exports of sweaters since around about mid-2013. And that's certainly increasing steadily. And talking to the mills that I visited, such as a company called Shinao, which is the biggest producer of machine knitting yarn, they said that their orders are much better than they were last year. Probably not quite as good as they'd hoped, but nevertheless much better, and they're quite positive about their business in terms of domestic demand for machine knitting yarn, but also export of machine knitting yarn, which reflects that improvement in demand for knitwear and sweaters generally. On the other hand, we see China's exports of wovenwear declining, and while it's flattened, that decline has flattened out a little bit recently, we still need to see an upturn to help lift demand for wool that goes into that wovenwear. This trend reflects a number of things. One is a fashion trend. Certainly we've all heard about casualisation, and this knitwear, the increase in knitwear exports is a result of casualisation. But it's also, there's been a fashion trend to knitwear generally on the fashion shows around the world in the last 12, 18 months, even 2 years. There's been a significant trend towards knitwear, as well as casual, semi-worsted, almost tweed look fabrics, and away from the traditional flat-faced men's suiting. In terms of wool imports, what we have seen, this chart shows wool imports by the major processing countries over the last 5 years, including 2014 for the year to date. You can see the percentage change for this year. You can see China has dropped, so raw wool purchased by China has declined. But on the other hand, raw wool purchases by India have increased, as they have by Czech Republic, Germany, and other countries in Europe. But even though we've seen that big increase in imports by India in particular, the size of China just means that overall imports by the major processing countries have declined 7% so far this year. We need to see a turnaround in purchases by China to see a real recovery in raw wool demand. I'll touch on world wool production and stocks. I know that Robert Herrmann will be talking about Australian wool production a bit later. But this chart just shows the trends in world wool production over the last 14 years, as well as the opening stocks. Now, these opening stock levels are very low. They're around about 10 or 12% of annual usage. Contrast that with cotton, where their stock levels currently are around about 90% of annual usage. So those stock levels are very low. Production levels are very low and have remained about the same levels since 2009. And when I say production is very low, it's around about 70-year lows for world wool production. This will certainly help support prices, but in itself will not mean that there'll be a lift in prices. We need to see an increase in demand, raw wool demand, to be able to see that lift in prices. One other thing that this next chart shows is a trend in production of wool going into apparel compared with wool that is more designed for interior textiles. And you can see the dotted line, the decline over the last 14 or 15 years, including what I projected out for the next couple of years in terms of apparel wool production. At the same time, there's been a moderate rise, a very slow rise in production for interior textiles wool, and that really reflects the trend to around the world, not just here in Australia, but around the world, to an interest in sheep for meat. And as a result, the wool tends to be broader and therefore more useful for interior textiles. So what about prospects for 2014-15? Well, I'm still optimistic. I went to China thinking that we might see an improvement in raw wool demand in the next month or two. I am still optimistic, but there are headwinds, and talking to some of the Chinese mills and hearing what the mills had to say at the Nanjing Wool Market Conference, my optimism has been tempered, and I think the timing will be pushed back a little bit. The slow improvement in economic growth in the US and Europe, but there are risks and uncertainties, as we all know. The conflict in the Ukraine, the situation in the Middle East are just two of the factors that are risks and will bring uncertainty. Competition from other fibres remains, but I think the more important factor is economic growth, the translation of that economic growth into retail sales and feeding back through to raw wool demand. While competition from other fibres is moderately important, I think it is less important. World wool production remains low, but there are mixed signals coming from China, as I'll explain. I'm aware of the time, so quickly, this chart shows economic growth and the forecasts for the next couple of years in the major wool-consuming countries. This is economic growth in the top 8 wool-consuming countries, weighted according to the amount of wool they consume at retail level. The orange line includes China. The blue line excludes China. The key thing is the advanced economies, the line excluding China, you can see is increasing over the next year or thereabouts before flattening out, whereas the economic growth including China is relatively flat, reflecting the slowdown in China's economic growth. So prospects are for better conditions, what we saw certainly in 2013, but only moderately better. In terms of price competitiveness, this chart shows wool's price relativity with synthetics on the left-hand side and cotton on the right-hand side. You've got 19 micron in the green, 21 micron in the orange, and 28 micron in the blue. And you can see the trends now. It goes back over 7 years, but more recently you can see against synthetics, wool is its competitiveness against synthetic fibres hasn't moved a lot. It's up and down a little bit, but nowhere near the kind of peaks that we saw back in 2012. But against cotton, we've certainly seen a surge in the ratio. In other words, wool's become less competitive against cotton, and that's largely because we've seen a drop in cotton prices in response to what is expected to be this year, another year where production exceeds consumption, which means those stocks will remain at very high levels, particularly in China. As I said, I don't think this is anywhere near as important as economic growth and the translation to retail sales. And so that leads me to the chart that, now this is a little bit complicated, this chart. The blue lines with the markers is the Eastern Market Indicator. The green and the orange lines are what are called composite leading indicators. They're from the OECD, and they give an indication about the turning points in economies around the world. Now, in the past, the Eastern market indicator has kind of moved in concert with the turning points of the leading indicators for the developed countries, the lime green line. But in the last 12 months, it seems very much to be moving in line with the trends in the leading indicators for China's economy. And until we see a turning point in that orange line, I suspect we probably won't see a real significant improvement in wool prices in US dollar terms. Now, specifically about China, and having just been in China and talking to mills and others, there's a real transition of the Chinese economy going on right now, away from the traditional, what we've been seeing over the last 20 years of invest, build, export, to something that the Chinese themselves, the senior spokesman from the State Development and Investment Corporation who was at the conference, calls the new normal, which is much more focused on reducing excess capacity that's been built up, adjusting to the higher labour costs, and focusing on higher value exports as well as building China's own domestic consumption. China's domestic consumption only accounts for around about 35% of annual GDP. Contrast that with the US, where domestic consumption accounts for around about 70% of GDP. And China's in the midst of that transition, away from that investment, build, export, to a combination of exporting of high value products, branded products, and domestic consumption. Now, there will be some growing pains and transition pains with that. One of the issues is about credit availability, and the government's certainly wound back on credit availability, both in the official banking sector but also the shadow banking sector, and that's causing some liquidity issues for some mills in China. Added to that is China's brought down new environmental limits. They first brought them down in 1st of January 2013. A new round will be coming on the 1st of January 2015, and it affects particularly early stage processing, scouring plants, and dyeing plants. And they are all in the midst of investing significantly in adjusting their environmental control measures and their handling measures of the effluent, particularly from the scours, so that they can meet those environmental measures. Tianyu, who is the biggest wool processor in the world, has been spending several billions of Chinese renminbi yuan on exactly addressing those environmental measures. Other mills are waiting to see the results of that investment in terms of the technology to be able to think about it, also introducing those. Knitwear, and when I'm talking about knitwear, it's both a flatbed knitting, which gives you the panels where they're sewn up into traditional jumpers, or circular knits, which are more used for next to skin wear. Knitwear is doing well generally, both in China and also in terms of exports. And we saw that at retail stores with the knitwear. Uniqlo, the big Japanese retailer, had a major push on fine merino knitwear, and many rows and rows and rows of fine merino knitwear in their stores. On the other hand, the worsted woven fabric for suiting is subdued, in particular for the corporate uniform market, which is a significant user of worsted fabric, which is processed from wool, including Australian wool. Certainly a greater interest in 19 to 23 micron wool, but there may be hints that there's still some pipeline stocks remaining. So in summary, some momentum in economic growth in the US and Europe, but we need to see that translate into retail sales of clothing from now on. Between now and January is the crucial period for retail sales for wool clothing, the northern autumn-winter period. There are risks, as I mentioned. I think export demand for clothing from China and other countries will improve, and we're seeing that already. In Italy, at the recent fairs, the Sistema, the Italian textile industry, reported 15% increase in knitted wool exports and a 4% increase in worsted fabric exports. So I think we're starting to see that in Italy, and I think that will come for China. I believe there will be better business conditions in the wool textile industry by the end of 2014, and in spite of competition from other fibres, I think we'll see raw wool demand picking up towards probably the end of the second half of 2014 and into 2015. But China and its economy will be key in terms of how they handle that transition and how that affects the mills. Thank you.
Okay, thanks, Chris. An excellent summary of what's happening on the demand side. I'm going to quickly talk about the drivers that are going to, or the things that are going to influence the price from our end of the pipeline, if you like, and I'll quickly set the scene. We all know that the clip's down, and Australian wool production is down 58% since 91-92. It's stabilised since 2009, but the dry of 2013 pushed sheep numbers a little bit lower. But as I've set up the top there, the clip is down, but all wools aren't wools. For example, adult crossbred volumes, relatively stable over the last 25 years, and this is despite a perceived push into more prime lambs. The crossbred adult wool has been pretty stable. But where we really start to see some of the differences happening is when we go into the merino section. 23 microns have fallen 90% since 91-92. It's an enormous change in volume, and that's also impacted on 21 micron volumes, down 79%. And I'm setting this scene because it will go to explaining what's happening with price and also what's likely to happen with price on the basis of these supply issues. So the big question there would be, if we hadn't have had that fall in 21 and 23 micron volumes, what would the prices have done? If we look at fine wool, it's a supply story, as I've said on the top there, and in this case we're just highlighting the 17 micron volumes. You can see that the 17 micron volumes have risen dramatically. They plateaued out, risen ninefold since the early 1990s. Price is under pressure, but one of the things to take out of this is a growing part of the industry. We note the recent sharp increase in supply just in this last 2 years, which has put more downward pressure on fine wool prices and premiums. In terms of the superfine, if we went back pre-96, 97, it was difficult to find any numbers of bales of significance that were finer than, in this case, 15.6. But that end of the micron category has peaked at 14,000 bales, which is up about 14-fold since 2000 and 2001. Now, the reason this is important is because, as we'll explain in a minute, the drivers of the volumes are impacting more severely on either end of the micron spectrum. So the 23 micron spectrum and the 15, 16 micron spectrums are the ones that get hit the most. Of course, what that's done is that our micron premiums have been crushed. And in this chart, we've had a look at the 17, 19 and 21 micron indicators. The 17 micron indicator was only reported in late 2009, I think. But you can see that we're now moving into a period where the prices are at such close range, and it's been only a very few times where we've seen them that close. And just to illustrate that, I've put in a table here of the percentiles. So as of last week, the 17 micron premium over 21s was 114 cents. Now, what a percentile tells us, it tells us how long that price relationship has occurred. So since 2002, the 17 micron premium over 21 has only been lower than where it is now, at around about 100 cents for 10% of the time. So in fact, it's been higher for 90% of the time. And so that's telling us that this supply shock that we've given the market with the increased volumes has impacted on the premiums that these types of wool get. One of the other things to keep in mind, and I'm grateful to Andrew Woods for his analysis on this, and he studied this factor quite intimately, is that the clip is actually, or the median clip micron is actually finer. So back in the late 1960s, the medium fibre diameter of the Australian wool clip was about 23 microns. As of this year, the median fibre diameter of the Australian wool clip is 19 microns. So it's been trending lower, and that was driven by market forces and demand and premiums for fine wool at different times. But the big factor has been seasonal conditions, and we'll show you some more information about that in a minute. But if we model the merino micron points, it indicates that it's increasing slightly in the next few years. And the drivers of that will be more normal seasons, so that takes the seasonal pressure off the microns, but also that, as we showed in that previous slide, the crashing of the micron premiums has taken away the incentive for wool producers to produce more fine wool. So we're likely to see that median micron stabilises in the next couple of years at around about 19, or perhaps a little bit better. A bit more work from Andrew Woods here, and that is looking at the seasonal effect of the weather or rainfall on microns. And as this chart's showing, about 80% of the year-on-year change in micron is as a result of the change in rainfall. So the green line here is the median change in rainfall, and if you'd like some more detail and information on that, you'll see there's some articles in Mecardo that go into detail explaining that. But clearly the micron follows the changes in rainfall pattern. And what we're seeing now is that the median rainfall, or the change in rainfall, is for the better. And I know that doesn't apply to all areas, but as a general comment on the Australian wool growing landscape, it is for the better, and that will have the effect of bringing up the micron and causing the clip to be slightly stronger than it was last year and the year before. So what does that mean for volumes? Well, going forward in this table, we've assumed that the clip falls by 3.7% next year, and we've assumed that as a result of that rainfall change, it becomes 0.2 of a micron broader. So as you can see from this, and these is we've got the green line is the projection for next year, the clip profile of volume by micron, and the orange line is last year's clip profile. And you can see in the 19 and 20 micron range, that change has little effect in the amounts of wool that fit into that category. But when you go to the fine end of the clip, in this case, I'm looking here at the 16 micron category, it has a 20% change year on year in terms of volumes. And the same happens at the other end of the scale. There'll be a lot more 23 micron wool, even though we're seeing as the clip profile there's only slight moves. So the effect on 17 micron and finer is large, as it is for the 22 and 23 micron. So we also need to be certain that there is a correlation between the price differences and that volume. And this particular table here, or this chart, is showing us that as changes in volume increase, so you can see in 06 and 07, the volume increased of 17 micron supply, the price fell. So volume goes up by a percentage, price premiums compared to the medium micron, which now is 19, fell. But as those volumes decline, so we go back to a more normal season, the price premiums increase, and so on. What we've had now is we've had a 3-year period almost where the price premiums year on year have been falling for fine wool. And that's certainly been a result of the increased supply we've shown you. But another spin-off effect is that the incentive to produce fine wool has now been quite diminished. And so not only will we have, hopefully, going into some more normal seasons, given the tough seasons we've had, but we'll also see a less incentive of farmers to produce fine wool and superfine wool as they chase after more meat sheep. So all that's going to add up is that the supply, or the rate of change of of superfine wool is going to go into the negative, and that will mean that the premiums based on past performance will increase. So increased supply will narrow premiums and widen discounts, and while decreased supply will widen the premiums and narrow the discounts. One other chart that we've been concerned reading quite a bit of negative reports about the wool market, and it has its challenges, there's no doubt about that. But if we look at the changing fibre diameter profile of the clip, what's happened to that price? So remembering back in the 60s, the micron profile, or the medium micron of the Australian wool clip was 23 micron, and it's changed to 19 now. It shows that when you look at the profile of the clip in that light, it's allowed for the price graph to show a more positive trend in price. So I don't think it's all doom and gloom in terms of the demand and the way the world looks at our wool. And I know, Chris has given us a very detailed look at what's happening. But the bigger picture is that as we've got finer, the clip profile's changed. It shows that the market price for that type of wool, or the average of the Australian wool clip, is improving. And we're going to have a lot of discussion and debate about the relevance of that, but that's a significant effect. One other thing that we look at is is price percentiles. And if you want to know more about how price percentiles are read, then I suggest just have a look at one of our articles on Mecardo. But price percentiles are telling us that at the moment, quite a bit of the Australian wool clip is, if we look at from 2003 to current, is sitting at reasonable price levels. Now, it may not be much consolation, but the reality is that since 2003, the market has spent a lot lower times for a lot of the clip. It's the fine end of the clip where most of the focus is on, and although these tables only take into account the 18 micron as the finest line, it's still sitting at a 50 percentile level. If we look at longer terms, it tells us the same story. So from 1996 to current, there's a similar story of where the wool is sitting in terms of percentiles. We pulled out this chart today because often people say, well, what do I do? How do I use percentiles? And one of the ways to use it is when looking at making forward sales. This chart shows us that as the market, and that line, the red line there, is the market movements. As the market movements moved through, if we just go to December of last year, where the market was around about 1,250 cents, what that was telling us was at a percentile level, the market was very high, and yet very little forward sales were made. So you can see those bars there is the amount of wool that was sold forward by growers. But if you went back to previous times when the market was at those similar levels, there were higher volumes sold. So we think rather than looking at the market and trying to pick which way it's going, if we understand where the price levels are and make our decisions that way, we're more likely to be taking some forward cover, and percentiles help us do that. So where's it likely to head? Well, there's a very good article that Andrew Woods wrote, which is on our website, and you can go and see all the details on there. But basically what we're looking at is, rather than predicting an exact number as to where the market's going to go, we have to provide a range. And the dark green and the light green is the best possible range of estimate that we can come up with. So price projections point to moderate ranges for the rises for the 19 micron during the first half of this season, and remembering 19 micron now is the medium of the Australian wool clip. And the medium projection is based slightly to the upside. So it sits in, once again, hearing what Chris is saying, taking into account that information, taking into account past movements, then we're all pretty much in agreement that we're going to see some modest increases for the second half of this year. But as these projections are showing, there are some concerns further down the track. So in summary, production's down but stabilised, but that will be subject to season. We don't think there's an appetite for the Australian merino clip to go lower. Medium micron is now 19, it's not 23 as it was. And supply is a tale of two stories. It's not all supply is lower. So fine and superfine are at all-time records. Medium and strong merino microns are at lows. The biggest impact on micron change is season. There will be other impacts, but the biggest one to watch is the season, and if we can go back to more normal seasons, then that will stabilise those micron differentials. Fine and strong microns get impacted the most by those changes in supply, and over the past 2 years, premiums have been crushed due to the increased supply. So in the future, I took heart from Andrew Woods' note last week. All's not lost for fine wool, as cashmere still sells at enormous premiums. And so that's why we're focusing on the supply issue and when it's more likely to change, because when that happens, then we're more likely to see fine wool premiums to return. It's unlikely the clip will increase in volume significantly. We know that's very difficult to do, and there's just not the appetite out there for people to go into sheep. And when the changing fibre diameter profile of the clip is allowed for, there's a bit more positive trend emerging. So in summary, that's where we are. We're very happy to answer any questions now, I think, Jenny Ann, and also if you would like to any of this information in any more specific detail, then please just send us a line.
Okay, thanks, Rob. Firstly, I'd just like to apologise to those that have tried to access the audio via computer. I'm not sure at this stage why it wasn't working, and I'll be following it up with our webinar platform provider just so we can avoid that happening in the future. We've recorded the webinar today, and I'll be sending everybody a link to this recording within the next day as soon as it becomes available to us. So if you've missed any of the discussion, you'll be able to catch up by listening to the recording. I'd now like to open the floor for questions. If you have a question, could you please type it in your chat box on the bottom left, and I'll direct them to the presenters. We'll just wait for some to come through. Got no questions. Have we got any questions coming through at all? Just while we're waiting for those to come through, I've got a survey on the right-hand side that I'm just going to open up now of the webinar. So if you've got questions, just continue to enter those. You'll have plenty of time to answer this survey. But while you're waiting, if you wouldn't mind just completing this survey, that would be terrific. Okay, so the first question, it's probably directed at Chris. How does knitwear HOTA compare to that for worsted fabrics?
Well, it's a great question, seeing I'm an economist. My understanding is that it's a little bit shorter, but not much. It's more about the spinning techniques. But one thing I did really investigate with some of the knitwear machine knitting yarn spinners is the difference between, let's say, because we've seen the premium with Superfine wool 18, 17 micron with 19, 20, 21 micron wool being really crushed, as Robert said. So I said to them, well, given that, is there an opportunity for you to use more of that Superfine wool? And the general answer was no. They tend to stick within that 19 to 23 micron range for a variety of reasons in terms of the type of fabrics they're producing, the yarn profile they're trying to achieve, and so on. The Superfine wool tends to go into the worsted fabric for suiting fabrics. So I not exactly answered the question, but it just was a topic that I really thought was worthwhile pursuing with those mills. Interestingly enough, though, after having spoken to, say, I mentioned Chinao, spoken to the MD there, by the end of the conference, he said he was starting to think maybe he could looking towards maybe using a bit more 18 micron wool in some of the fabrics, particularly in circular nets.
Okay, thank you, Chris. Chris, I've got another one for you. Just wondering how much the shift in global wool production profile to a more broader average can be attributed to the, I beg your pardon, probably Rob might be best for this one. Just wondering how much the shift in global wool production profile to a more broader average can be attributed to the reduced production in traditional fine wool producing countries versus movement to meat sheep.
It's a good question. I think the answer is probably it's twofold. And I've been reading with interest these last couple of weeks the articles in Rural Press about the fine wool producers who are haven't got great succession plans or aren't planning to go further in or have leased their properties. I think there's a bit of that going on. But I think more to the point is that if you look at the fine wool, the increase in fine wool production, it came with a rush, and I think we'll see its demise continue now as people go back to looking for more dual-purpose sheep. And if anybody who sat in on our lamb and sheep outlook conference would know that the outlook for sheep and lamb meats is very strong and very optimistic. So everybody now with sheep is probably starting to look at it and say, well, not only do I have to grow wool and as much good fine wool as I can, but just as importantly, the sheep have to be robust enough to produce lambs, rare lambs, get them to killable weights, and have good survivability. So I think we'll see, there's no doubt in my mind that we'll see a sustained period where the sheep are designed for meat, and the merino sheep we've seen more as a dual-purpose sheep.
Thanks, Rob. Another question for you, probably, Rob. Will flock rebuilding have an effect on the wool prices in the longer term, and has this been taken into account in our presentation?
Well, I'll answer it partly, but then I'll hand over to Chris, because my view is that it won't have a longer-term effect on wool prices in the negative. I think we've got to be careful that we don't get to the stage where we aren't producing enough wool to encourage people to stay in the trade. And if you look at the recent exodus of wool exporters out of the industry, that's all part of not only tough trading conditions, but lower volumes to make money out of. So I think if the wool clip did increase, I can't see how it would have an effect on prices in the longer term. Do you have anything to add to that, Chris?
Look, Rob, my view is that while there might be an increase in the flock and in production, it's not going to be a large increase. And there's certainly one of the issues I didn't cover in China in particular is that there is significant overcapacity in early stage processing. And you're dead right. I would prefer to see a bit of an increase to encourage not all that capacity disappearing, because I think we need to make sure that we maintain the interest in wool processing in China and elsewhere. And we can only do that by seeing a stabilisation and an improvement in wool production. But I don't think it'll be enough to greatly influence wool prices. I really think what we need to see, as I said earlier, what we need to see is an improvement in wool demand, raw wool demand, and that stems from improved retail sales. One of the other things, just picking up the other question about reduced production in traditional fine wool producing countries, that's certainly been an issue. So we've seen a reduction in production in Australia and some other countries, but the move to meat sheep, I think, is the most significant impact.
Thank you, Chris. Chris, I've got another one for you. We're jumping around a little bit just as they're coming through. Can you explain how demand for the POMB works?
POMB means what? Do you know? I'm
not sure. I was hoping you would. I'll get some more information while we move on to the next question. And this is probably, Chris, directed at you. There wasn't a lot of discussion about financing issues today, but that has been commonly cited as a major problem with Chinese buying at the moment. Have you got any comments?
Certainly, talking to the mills as I did, they did talk about financing, but not a great deal, not as much as I expected. There are some concerns for some mills, not all. Some of the bigger mills probably don't have those kind of financing issues. Others do to a lesser extent, but their biggest focus and their biggest discussion point was on the environmental, the new environmental limits and the impact that's having on their ability to process greasy wool and turn it into wool top. That was the most commonly cited issue that they had concerns about. Certainly, financing is one of the other issues, and that goes back to the change in the Chinese economy to the new normal, and as the government tries to rein in some of those shadow banking sectors and so on to really hone in on investments in sectors and products that are going to provide productive returns rather than building more houses, for example, or units.
Jenny Ann, could the position of mid-break,
that's
position of break in the middle, might be a question for Andrew just to comment on briefly, because I know he's planning to do some research into that next week. Are you there, Andrew?
Yep. Can you hear me?
Yep.
Well, answer to that, there's a couple of parts to the answer. Firstly, the mid-break affects the processing capacity of wool. That's and the Team 3 formula shows you that increased mid-break gives you greater waste and shorter length in the top, and greater variability in the length of the fibre in the top. So that's the first part. So now exporters will be putting consignments together to try and meet averages, and if seasonal conditions conspire and we have a lot of high mid-break wool coming through, they will struggle to use all that high mid-break wool and still meet their averages, so they tend to favour the lower mid-break wool and discount the higher accordingly. So that's a sort of a seasonal thing that comes and goes. But there's also been a trend, a change or a structural change in the market where a lot of high mid-break wools, a lot of wools with faults were hidden in the past in what we call OMLs. These were put together, these lots were put together and then tested as a group, and the average would have been right, and it was sent off to China, and the Chinese have changed their buying patterns to request that wools, only grower certified lots are delivered to them rather than lots put together by exporters. So there's been a structural change in the market, which means that it's harder to hide high mid-break wools when they do turn up. So they've turned up, exporters can't hide them, so they have to discount them. And with time, the level of high mid-break will recede and the discounts will recede as well. I hope that helps. You right?
Thanks, Andrew.
Sorry, Andrew. Thank you. We've got time for one more quick question, and Andrew, I'm hoping you can answer this, please. Can 17 micron recover if we consider that 18.5 to 19.5 micron is best suited for circular knits, particularly with casualisation?
Yeah, that's a really good question, which is why it's part of me partly saying I can answer part of the question, but not all of the question. So, firstly, firstly you have to define what do you mean by really recover. Recover to what? So, if we think, can they recover to levels seen, say, in 1999, 2000? The answer is probably no, and the reason for that is that there's a lot more being produced now than there was then. Can they recover to levels seen on average over the last decade? The answer would be yes, and that'll be just a function of, I think, change in seasonal, change in supply, which is year to year, driven mainly by season. So it's a part answer. The part answer says we can recover to what we've seen in the last decade, just based on changes in supply, but we won't return to levels seen in the late 1990s or the late 1980s unless and this is the only way it would happen, the median, the merino clip returned to 22 or 21, 22 micron, in which case there'd be very little 17 being produced.
Thanks, Andrew.
Just one thing, Jenny Ann, on that, on the demand side, it's kind of really interesting that while the premiums have been crushed, we're still selling and exporting a lot of that 17 micron wool, so it's going into something. And while the question is certainly right about where that 18.5 to 19.5 micron is best suited for circulant, that 17 micron still going into something. So if we see a pullback in the supply of that, we could see a recovery, and that just supports what Andrew was saying.
Thank you, Chris. Unfortunately, we're out of time. We've got a couple of other questions, but we'll address those individually with you outside of this webinar, just in the interest of time. Thanks very much for completing your surveys, for those of you that did. And if you have any other feedback you'd like to provide, my email address and phone number is on the screen, so please contact me. Any of you that haven't experienced Mecardo before will be set up with a 3-month free trial, and we'll contact you in the next couple of days with information on how you can access this. So thanks very much for participating in our webinar today. I hope you have found it valuable. And thanks very much, Chris and Andrew, and to Rob for taking the time to participate in the lead-up and today. As always, it's much appreciated. So thank you very much. Bye now.
Thank you.